You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Happy New Year, and thanks for tuning into Mining Stock Education. I sincerely appreciate you making this show part of your information news flow in 2021. Joining me today is returning guest Dave Kranzler. He is the editor of the Mining Stock Journal and also the co-producer of the Mining Stock Daily podcast with Trevor Hall. Dave's website to find more information and to get his weekly posts on his blog is at investmentresearchdynamics.com. Dave, thanks for coming back on the show.
Hey Bill, Happy New Year, and thanks for having me back on again.
Happy New Year to you too. Let's go over your stock picks, mining stock picks for 2020. Can we start off with a loser or perhaps a lesson that you learned in this past year?
Oh boy, the truth test here, huh? Starting off early and hard on me. That's a really good question. I don't have any losers. Sorry. No, actually, that's far from the truth. I'd say the biggest disappointments for me it was Gatling Exploration, and it's a stock that I was friendly with the CEO from when he was running Bonterra, and then they spun off Gatling, and he jumped over to Gatling. So if you owned Bonterra, you got shares in Gatling, and they actually do have a resource on their property, the Larder project. And for some reason, and not, like I said, I've known this company. I've recommended it in Mining Stock Journal and have invested in it for probably, I don't know, 2.5 years. I forget exactly when the spinoff was. I want to say 2018. Except when it did the run up after it was spun off, and then it traded back down. Part of that was market related. It wasn't performing, and I couldn't figure out why. And there may be no real specific reason why it isn't performing. I'm not a trained geologist, so maybe there's something wrong with the geology. Even though they were producing good drill results. With decent grades, and the area where the property is a hot area in Canada right now, and it just seemed like they kept issuing shares to fund drilling, and the stock was going nowhere, and so it did a reverse split. They call them share consolidations now, and a lot of times, not always, a reverse split is an effort to kind of hide the amount of shares historically that have been issued. Amount of dilution. And so sometimes it can be a red flag, sometimes it isn't. Like a lot of times when I'm looking at a junior for the first time, what I'll do is I'll go and a lot of these juniors, you may have just heard about them this year, but a lot of them have been around for quite some time. And I'll look at the news history back for as far back as the news history goes on the company's website. And you can actually learn a lot about the early days of a company like that, and not necessarily Gatling specifically, because it's only been around for 2.5, 3 years or whatever. But there's companies where you can go back and pull up news from say 2011, 2012, and if they've done a reverse split at some point, I want to know about it, because I want to know what the real amount of share issuance has been over the years, and I want to know why the company doesn't have an advanced project after 6 or 7 or 8 years of operating. You know what I mean? But you can find out a lot of these companies have kicked around, several projects over the years, and that's something that you need to know about. So I guess the point of all this is like with a company like Gatling, there's something wrong there that I can't figure out. And so I actually, and I've learned to do this. It's only happened a couple times where I actually, in my newsletter, I said, hey, I've given up on this company. I'm sorry. I don't know why it isn't going anywhere. I like the management. I like the project. It's had good drill results, but I'm missing something. And so I've disinvested of it for now. I'm going to stop reporting on it on a regular basis, but I will follow it because, there may be some type of event that happens that causes me to change my mind. Another stock that's similar to that is Bonterra. And Bonterra was, Gatling was spun out from Bonterra. And for the longest time, Bonterra wouldn't move. And they have a lot of shares outstanding, or they did. They also did a reverse split. And the stock was just not performing. They got a great project, and they got a decent resource. And either I was missing something or the market was missing something. The stock wasn't performing, and for me personally, or in my fund. So I was just like, you know what, I'm going to take a break from this. And that was something I had announced in my mining stock journal, I think late last year. This is one where, it was my bad. I mean, I sold the stock probably like around 30 cents. I was wrong about being wrong on it.
Dave, you were holding the stock back.
It very well could have been me. I might have been the one jinxing it, but in that case, I was wrong about being wrong. That's very humbling when you got to say to your subscribers, because, there's subscribers who have owned it the whole time and they're quite happy right now. And you got to say to them, look, I got my tail between my legs. I was wrong about being wrong on this one. So I would say Gatling's probably my biggest disappointment, my biggest loser this year. Behind that is probably Millrock Resources. That's one I'm adamant about, that still has plenty of upside potential. But I think I started recommending it and investing in it around 12 or 13 cents US. And I believe it's been as high as the high teens, and now it's down at 8 cents. And I don't know if you know the Millrock story, but
projects in Alaska, and they're a project generator.
Yep. The Millrock property is kind of adjacent and extended from it. And they think, they haven't been able to prove it yet, but they haven't done a lot of drilling yet. They think that it's possible that the source that created the gold for the Pogo mine may also have mineralized, the land that they own adjacent to it. And so, I mean, they just started drilling on it this year, and I think they've put, 5 or 6 holes in it, maybe. And the market was disappointed by the drill results. And there's a company called Resolution Mining. It's an Australian company, and they have an agreement with Millrock. Millrock's more kind of like a project generator, but they got to spend a lot of money. It's like $5 million a year over the next 5 years or something. And they spent $5 million on it this year. If they don't see a discovery in the first drill program, they give up on it.
And when they see everybody else bragging on Twitter about their 400, 500% gains in 4 months, exactly. It's tough.
Exactly. And this one, I'm definitely not giving up on. There's some very, very smart people. EMX Royalties, you may or may not know them. Dave Cole is I highly respect him as a geologist and a company operator. And EMX has an investment in Millrock. They also have NSRs that they've purchased on mining claims around that property. And they have reason to believe that, this thing could be a massive grand slam home run. Now, that doesn't mean it will be, but, again, the early drill that we saw were just exploratory holes trying to figure out, the geology of the property. Apparently the geology is very similar to the geology of the Pogo mine, the geology underneath the ground there. And they did find some gold mineralization, but nothing that could be called meaningful in terms of a discovery. But it will also tell them, where to put the next holes. And they've got several other targets around that area that they're going to start poking holes into. And I mean, this is literally one of those names where, if they make a discovery, the stock could be, go up 5-fold very quickly. So, I liked it at 12, 13 cents. I love it at 8 cents. I mean, your downside is your upside's a lot higher at 8 cents and your downside's limited. And, that's an important point, because one of the things that I try to do with the names that I follow is explain to the subscribers, what the upside and downside risk is, and why, with most of these juniors, as you buy something at 20 cents, it could go to $1 or it could go to 5 cents. And it's you just got to be aware of that. I mean, it's not like internet or tech stocks where everything you buy seems to go up. it's a hit or miss process.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com. Well, Dave, I made you start off by talking about your disappointment, so I appreciate your humility in that regard, but let's pat yourself on the back now. What were some of your winners of the past year?
There's two ways to measure it, and I'm measuring it from December 31st, 2019. Because as you know, we had a huge sell-off in March.
Yep.
And I guess probably in terms of just the calendar year, my biggest winner was Discovery Metals. So, and are you familiar with Discovery?
Yes. Yeah.
Yeah. Okay.
Low grade, humongous silver project, right?
Well, the jury's out on whether it's low grade or not. But yeah, they have a resource. They could start an open pit mine operation after they.
And the open pit starter is a higher grade, right? The
open pit actually, they believe it's much higher grade than Lavon had proved out when Lavon Resources owned it. And sadly, the CEO, who I was friendly with, a great guy, passed away, and so Discovery purchased Lavon and the Cordero project. And when I first started looking at it, Discovery only had a Canadian listing, TSX venture listing. And I said to the guy, look, man, you gotta get this OTC listed on the OTC here, because it's going to really broaden your investor base. And I know US investors are starved for silver ideas. So, when it got listed, I think it was around 20 cents. So this year it started off 2020 at 52 cents, and it ran as high as $2.10.
A lot of that is on the Eric Sprott, right? Bump. What'd you say?
A lot of that probably was, yeah. I always forget Eric Sprott actually has a big investment in it. He really likes it. I really like it. I remember Taj, the CEO, because we were talking about the Cordero project, and I had owned Lavon for, since 2016. And he said that, I just remember him telling me that he thought his geologists and because he's a geologist also, thought that just the open pit portion of the Cordero project was a grand slam at $17 or $18 silver. And lo and behold, the market finally started recognizing it. I mean, the market cap for a company that doesn't, not even close to having an operating mine, the market cap is humongous. So now the underground portion was always there, the underground mineralization, but Lavon Resources never really wanted, Ron Tremblay didn't want to start drilling until silver went over $20, because he thought that the low grade underground resource was not going to be economical unless you got above $20. And his idea was to get the open pit producing at $20 and use that money to fund, because he owned, I think, 30% of the stock. He doesn't want to dilute himself by issuing shares. He's going to use that money to fund the underground build out. Well, Discovery's in there, and they're like, no, we think there's reason to believe that there's potential for a much higher grade underground resource as well.
What's your hold target for this one, Dave? Like, what's your sell price?
Well, like in my fund, it was at one point the biggest position, and now it's kind of a slightly underweighted position. Stock started, once it started going over like $1.60, I started slowly selling shares. And I sold my, I kept half the position, but I think I sold the last shares just over $2. And then when it went down to $1.20, I think in October, maybe, I started adding shares back, because I felt like at $1.20, it was decent value for the amount of risk that's still embedded in the project. I mean, it is, de-risked quite a bit, but there's always risks there until you get to the point where you actually have, you're putting the shovel in the ground to build a mine. There's risk, and there's even risk up to the point where until you have your first pour, right? So, and it's not just engineering or technical or economic risk. There's political risk. So, but yeah, on this one, I don't really have an upside target. There's really not a ceiling in place until the company can figure out just how big the resource is.
Mm-hmm. And then you're bullish on silver. So, right.
You're bullish on silver.
Yeah.
Now this one, I wouldn't, I wouldn't swing for the fence on it at the price point. So it's at $1.48 US right now. It's probably one to start a position in at this level and leave plenty of capital that you would allocate to a name like this on the sidelines, so that if, we have a market hiccup, or, maybe the next batch of drill results, all their drill results have been phenomenal since Discovery took it over. But let's say they, release a batch of bad drill results that the market doesn't like. Now, I love opportunities like that when the stock gets creamed because I'm like, one set of bad drill results, who gives a crap? I mean, that happens to every company. So, but that's what you want to save capital on the side for, is for opportunities like that.
Any more of last year that you had that were substantial winners before we move on to where you see value for next year?
I mean, another one is GR Silver. Do you know that one?
Yes, they're a sponsor. Yep.
Why didn't I know that?
Yep.
Or maybe I did know that.
Yep. So I own it. Yep.
Yeah. So you know the story well.
Yep.
And that one, I started recommending that one, I believe, at 16 cents. And it's been as high as 70 cents. This is US.
Mm-hmm.
So,
I think, in the 90s Canadian.
Yeah. I mean, it's been, so Discovery for over the calendar year has been a 4-bagger. And, obviously if you bought it at 20 cents in March, you got a 10-bagger out of it. And same thing with GR Silver. It's not quite as much. I think for the calendar year, it's a little under a 4-bagger. But again, if you had bought shares, and I didn't pull up where it was trading in March, but it was trading substantially lower than where it was at the beginning of the year. So, with both of these companies, there's still, I have faith that they're both going to end up with big resources. And I think GR Silver, I mean, they're surrounded by silver producing titans, right? So, First Majestic specifically, which I think First Majestic
sold them that project, the Plumosis project. They
got the Plumosis project,
yeah.
But I think they have 12 or 13% of the stock.
Yes. Yep.
So,
since it's a past producer, the pathway to production or production again is a lot quicker than Discovery for sure. Right.
And, now, a lot of these projects that are coming to life, like Plumosa, they were not economical when silver was in the low teens or single digits, but now you got silver in the mid 20s and probably going a lot higher. And all of a sudden projects that didn't make sense at say $15 silver, now all of a sudden are going to be home runs, when silver goes over 30. So, that's I think GR Silver is sitting on a big property that has that potential. I believe that it already has an existing resource. I think it does from the property that they bought from First Majestic.
Yeah, they have about 40 million ounces of NI 43-101 compliant silver right now, I believe.
Right, and so to me, First Majestic is the most likely acquirer of the company, but they're not the only one in there that would necessarily put up a fight for it. Fresnillo has a massive mine it's not adjacent to it, but it's in the same silver trend. And I've always thought, the first time I looked at this thing, I thought Fresnillo might be the logical acquirer until.
And the new chairman came over from Mag Silver too.
Yes, that's right. That's right. The other interesting thing, and I have a feeling it's going to follow kind of the same paradigm, is that Marcio was at Silvercrest Mines
Yes.
when it got taken over by First Majestic. So he knows the management at First Majestic intimately.
Yep.
So, and he was one of the ones that helped put that merger together. So that's another reason why I think, he's going to build out the resource, start the permitting process, and we're talking, probably 2 or 3 years down the road, and then boom, First Majestic buys it.
Yep. Well, Dave, what about for 2021? And I'm going to give this disclaimer. I always do this. Dave's subscribers get the picks in real time. And by the time Dave shares it on a podcast like this, his people have already had an opportunity to buy it. But with that disclaimer, anything you could share about next year and where you're seeing potential value?
Sure. And I appreciate that, because I am pretty fierce about, keeping my newer ideas proprietary to my subscribers. So, and actually 2 of these are new ideas that I just started following and investing in and recommending. And the first one is BlackRock Gold. You familiar with that one?
Yes. Nevada.
Yes. It's in Tonopah.
Yeah.
It really should be called BlackRock Silver, because it's in an old mining district, a historic mining district. At one point, I believe this district was the largest silver producing district in the world. I mean, I hate to throw numbers out there, but let's just say, they think they have cause to believe that there's, several 100 million ounces of silver that were kind of left behind by the old pickaxe miners. I don't think there's been any mining on this property either the 1930s or the 1950s. I forget. It's got a really interesting history. And so at any rate, they think that, and they got a massive property and lots of mineralized targets to explore on the property. It's under 100 million. And, if this thing has 300 or 400 million ounces of silver on it, you're talking about, something that could be worth ultimately $1 billion. Now, these are big ifs. And that's the void between concept and proving the concept is big in this industry, as you know. So,
yes.
But this is one it's a high risk, high return stock. It's even, and this stock was trading, I think, as low as 16 cents this year. And I regret not having looked at it earlier. Someone had told me about it, and I just kind of set it aside. And that's another hard part about this business in this investing in this sector is, you might not really start liking an idea until it's already gone up five or 6 times, right? Or even more. And this is one of those where, I started recommending it at, I think, the high 60-cent area, and it went down to the low 50s recently, and now it's back up around, the low 70-cent area. This
Dave,
is one that could,
on that issue, when a stock goes up 5 to 6 fold, I've had a recent meeting over Zoom with a management team that wanted to introduce the story. And like you said, this story went up 5 to 6 times. So they shared with me the potential upside, and I could just do a quick calculation. Okay, if they're successful and they achieve this many ounces, it could equate to this market cap. So I said to myself, okay, 5-fold upside, 3 to 5-fold upside if they execute. But I was more concerned about my downside, because like you said, if you go 5 to 6-fold in 3 months, what's the consolidation going to look like? How strong are your shareholders? How do people perceive fundamental value? What are some of the questions you ask when you're talking to a management team after their share price rolls parabolic like that?
Why do I want to invest in this thing now?
Right. Am I going to lose 50% in the next month? Was my question.
And, the truth is, these guys, again, these guys, they can be optimistic, or they can suspect that they're sitting on, a pot of gold or a pot of silver, but they don't know until they get in there and really start drilling the crap out of it, and producing an economic resource is only part of the equation. You got to deal with permitting and things like that. And you got to deal with, people who environmentally are against mining, and that's in every jurisdiction. So there's a lot of risk with these things. And if you come into a stock that's already gone up fivefold, your potential downside is that it goes back to where it was before it made the fivefold run, right?
Or at least
And then
halfway.
you just got to
right,
that's
halfway.
where you got to make a pardon me?
Halfway, because these mining stocks often retrace 50% before they make the next leg up, right?
That can happen too. Yeah. I'm looking in the scenario where all of a sudden, it's starting to look like maybe they don't have what they thought they had. Some rocky drill results, some dusters. But that's where you got to kind of make a judgment call. And this particular one, after I saw the webinar presentation of it, I spent like 2 hours on the phone with the chairman, Andrew Pollard. And I'm probably not as convinced as he is that they've got, several 100 million ounces of silver. And I want to see, obviously, a lot more drilling, which is they're going to drill the crap out of this property in 2021. But I think at this price level, I think it's the upside potential is way outweighs the downside risk, because there's also, they have another property. It's a gold property that was the original, that was kind of the genesis of the property, and that's why it's called Blackrock Gold instead of Blackrock Silver. And that right now it's a low grade mineralization project, but they think that there's a lot more high grade on there. It's in the same area as some prolific mines up in northern Nevada, and so that, to me, that property alone, and I think they're going to spin it off in 2021 to shareholders, which is a bonus, right? I think that property right there buffers the downside potential if all of a sudden, BlackRock has a series of drill results that the market doesn't like. So that's probably my favorite stock right now for 2021. And again, it's got downside risk to it. Make no mistake about that. Another one that one of my subscribers had asked me about it, I don't know, 3 or 4 months ago, even a little bit longer, is Cabral Gold. And do you know that one?
Yes, I do. And that one had a nice run, a really nice run. So
and I think it's going to have a lot more nice runs ahead of it as well.
Okay. So that'd be an example of a stock that had a nice run that you're comfortable at this point,
Absolutely.
It's an earlier stage. There's a resource there, but it's earlier stage. But yes, there's a lot of potential based on the amount of targets that they've generated.
Yes. And the property's it was a historic placer mining property, right? So basically, pickaxe miners going down there and scooping sand out of the riverbeds and getting the gold out of it. And the CEO told me that he thinks, and again, there's no guarantee that this is the case, but they believe that just the old placer tailings have 2 million ounces of gold in it. So
I will say of Alan Carter, the CEO, that I believe he put 1.7 million of his own money, his personal savings, into the company, which he said may not be that meaningful for some, but it was very meaningful for him. So I really appreciated that.
No, and he seems like he's a really nice, humble guy. I should have looked up the share structure before we did this, but the audience can subscribe to my newsletter, and they'll get the back issue that has my initial write-up on Cabral. But it's got a tight share structure, which I like. And as you say, the CEO he's personally heavily invested in it. So it's not like some of these, he's going to act like some of the CEOs of some of these companies just issue a crap load of shares to fund drilling. He's going to be very calculated about when and how he has to raise money. So I always ask these guys, hey, do you got any strategic big mining companies looking at you or talking to you? And they can sort of have vague answers. Yeah, we've got some NDA, some non-disclosure agreements outstanding, but they're not going to identify specifics. So, but I can guarantee you there's probably a handful of large cap producers that are watching this one closely, and because we're going to start getting into a point here, and again, I think 2021 is a pivotal year for this. where a lot of these large cap producers, the Newmonts, the Barricks, Agnico Eagles of the world, they're depleting their resources faster than they're replacing them. And there's probably not very many 5 to 10 million ounce gold projects just sitting around the globe waiting to be found. I think there's probably some out there, but they're going to get harder to find. And so a lot of these large cap producers, they're either going to have to merge with each other, or they're, like we saw with Newmont and Goldcorp, for instance, or they're going to have to acquire junior producer or junior explorers that have resource in the ground, even though the resource may not be as large as some of these companies typically want to see before they invest in something.
Dave, one more question on Cabral. Obviously, BlackRock's in Nevada, so nobody questions Nevada as a jurisdiction. But Brazil, that's not of concern for you, or did you have to wrestle through Brazil as a mining jurisdiction a little before you park some dollars there in that company?
I mean, again, the political risk is really it can crop up and bite you in the ass from anywhere. And believe it or not, people look at countries and they say, "Oh, well, that's a risky country politically." A lot of these countries rely on mining for tax revenues and employment. And so at the sovereign level, I think a lot of these countries are not as unfriendly or as risky as might be the perception. Where I've been bitten in the butt with political risk is at the local jurisdictional level. Brazil doesn't bother me just because there's so many international scale, large cap mining companies operating there that I'd be surprised if, at least at the sovereign level, the government would bite the hand that feeds them. You know what I mean? And so in Brazil, it's your risk is probably more likely going to come from local jurisdictional level. And the area where Cabral is operating has such a long history of mining. That there's going to be risk there, but I think that's part of the downside risk equation is the political risk. But I think the upside potential of this project far outweighs the operational or the jurisdictional risk. So I mean, he's trading where 50 cents US right now. Your downside 50 cents, and I think your upside is $2 or $3 at least. So to me, that the upside downside makes a lot of sense at this level.
Dave, for listeners that have been listening to this discussion, they can go to investmentresearchdynamics.com to learn about your service. But give me a quick pitch of why they'd want to sign up for your Mining Stock Journal in 2021, please.
I've been researching and investing and heavily involved in this sector for 20 years now. And so over that time, I've kind of developed a formula for what I look for with juniors. And, it's out of 10 juniors that you're going to pick, you're lucky if 2 or 3 actually are grand slams. And, some of them are going to muddle along and some of them are going to be failures. So the idea is that the 2 or 3 grand slams that you manage to pick out way more than offset the opportunity cost of the ones that don't do anything and go nowhere, and the ones that are busts. So, well, if I say so myself, I think I do a good job of explaining to investors why I like a project, why I like a company, what the upside is, what the downside risks are. And, I'd say I invest in 80% of the names that I cover. So I have a ton of skin in the game, and a lot of newsletter writers can't say that. So, for a few years now, people have been telling me, you got to raise the price of this. I can't believe how cheap it is for what you offer. So I guess probably the best selling point is I don't have a minimum time commitment. You sign up $20 for the first month. And if you don't like it, shoot me an email and I can cancel it on my side, or you can cancel it on your side through PayPal.
It's $10 an episode, essentially, right? Or $10 per
$10 an issue. Yeah.
Issue. Yeah. All right. That's hard to beat, especially when a Starbucks coffee, like you said, costs $5 nowadays.
Yeah, I'm probably going to raise the price at some point in 2021, unless we have a bad year in the market.
Hmm.
But existing subscribers would be grandfathered at the old price.
Okay. All right. Again, go to investmentresearchdynamics.com. Dave, as always, I appreciate catching up. It's been a few months, and thanks for sharing a lot of these stock picks.
Hey, my pleasure, Bill, and love doing these podcasts with you. So anytime, I can make the time to do these. And here's to a hopefully prosperous 2021.
Yes, likewise.